Just like their House colleagues, it seems GOP senators are incapable of putting out a clean and principled bill. Every good idea they present is usually followed by a couple of bad ones. After the House Ways and Means Committee passed the Tax Cuts and Jobs bill, Republicans in the U.S. Senate released their own tax reform proposal last week. Some of the Senate proposals are improvements, but some are worse than the House version. Several GOP senators have already threatened not to support either the Senate or the House version. Since the GOP has a very thin majority in the Senate, people can't help but wonder whether the Senate will become the burial chamber for GOP tax reform like it was for the Obamacare repeal. The major differences between the bills: while the House bill will cut the corporate tax rate from 35%, one of the highest among the developed nations, to 20% immediately, the Senate bill wants to delay the cut for 1 year, a terrible idea. Many economists and politicians on both sides of the ideological divide have long recognized that our corporate tax rate isn't competitive and has hindered America's economic growth. There are many benefits to cutting the corporate tax rate: stimulating long-term economic growth, increasing American businesses' competitiveness, attracting entrepreneurs and new investments to U.S. soil, and higher wages and living standards for American workers. Yet corporate tax cuts can be a hard sell to many ordinary Americans because businesses need time to plan and adjust to tax code changes, so people won't see or feel some of these benefits immediately.